Let's talk from a historical perspective. What we like to do on the show is just kind of like show you where we're at and give a little data with perspective, right, GC?
Love it, baby. We get into this zone of looking at prices. And for those who continue to show up every show and every quarterly real estate market update, we appreciate you. These slides they'll look pretty familiar, but I think there's value in benchmarking quarter over quarter.
So speaking of something that looks familiar, this chart, we've
There
been throwing this chart up here for 4 years now. So talk to me through it, GC.
So this is the Jacksonville historical home pricing, and it goes back from 2001 all the way through present day. Those blue jagged lines are all of the median home sales prices at different points in time. That red smooth line is what the projected median home sales price is for our market. And this is helpful to understand, are we in a normal performing real estate market? Or are we in a bubble? Because this graph shows both, right? From 2004 to 2008, you saw what a bubble looks like. And if you take it from like what the feel of what a bubble might feel like, and you put it in objective terms, it's just literally what percentage above that median projected line are we at for real pricing today?
Yep.
And that's what happened due to the Great Recession and due to the challenges that we had in the lending market and the real estate market at that time, which caused the Great Recession. Well, what we see now is a very different perspective here. For many, many years, for most of the last decade and a half, we have been below that line. And that's why we have been saying, listen, home prices over the long haul are going to go up. And guess what? They did. And they hit the median projected line and they went above that line. Started to get questions from all of you of, hey, does this mean that we're in another bubble? And my answer was, I don't think so, because we're looking at other metrics along the line as well. But what you're seeing now is that we were right. We weren't in a bubble. We expected the market to normalize, and that's what we're seeing. So as we look right now, the median projected home pricing line is exactly where we are for home pricing, which is really interesting to note. I will share one thing. The projected line has gone up as it has over the years as we've been tracking this. We always use real data to support what this line projects at. And from 1982 to 2022, according to John Burns, that median projected home pricing line for Jacksonville is actually at 5% per year. Prior to this, it was 4.8% per year. So that line projects 5% per year, which is the average of the home price appreciation, again, going all the way back from 1982.
So home price appreciation isn't just increasing, but the rate of increase for home price appreciation has increased.
Walk me through what you said.
I'll say that differently. The slope has changed. Right?
Yes.
Like it isn't just there is a regular year-over-year increase that has always happened, but Jacksonville, the trajectory of the Jacksonville curve, the slope has changed.
The slope has changed.
And now it's moving up faster than it was before.
What the data is telling you is you as an owner of rental properties over the long haul, you should expect about 5% home price appreciation year over year. That's, of course, the biggest contributor to your overall profit and wealth that you generate from owning rental properties. That's about 5%.
Got it. So then when it comes to what's next, GC, I think we like to go to our favorite statistic that we made famous here on the show, this months of inventory statistic. And that essentially means if you divide the amount of homes available in the market by, I just blanked out. So it's like you divide the homes available in the market by the amount of time,
Sales.
By the amount of sales.
Yep.
Correct. So like how long will it take for, if there's no new homes in the market, for the market to sell out?
Exactly.
Essentially. And historically for Jacksonville, what we talked about this idea that it had been 4.8% home price appreciation. Now it's 5% home price appreciation is the standard average, but the normal months of inventory is between 6 and 7. So when it's between 6 and 7, you can expect it to be that 5% number. And that's how Gregg kind of like famously predicted when COVID hit and everybody's freaking out thinking that the bottom was going to drop out. Gregg said, I don't know, because we track this number MOI. And, you know, like during the Great Recession, it was like 18 or something like that. That's why we knew it was going to drop out. But right now it's like 3 or 4. So that means that not only do we not think that the bottom is going to drop out, but we think that home prices are going to go up.
Yes.
So we really hang on this home price, on this months of inventory number in order to like predict the short term of what's happening. How'd I do there?
You did pretty well. I would say this is one of a set of tools that we use to see where home prices go.
Yeah.
So I will say that if you just look at 1 month after 1 month, especially in slow seasonal months, like around winter, you might find that months of inventory spike for 1 month. So I don't want to put and say that this is the thing we hang our hat on. This is one of a series of tools. Another one being that price graph that we just looked at, comparing what median projected would be over what actuals are. But, predicting where the market is going is never going to be just one tool.
Got it. Okay. So that being said, let's go over the MOI performance here. We see that in February 2019, we had 4.3 months of inventory. Appreciation over the next 12 months was 4.3%. We also see this number here. That's significant. The days on market, right? Like how long it takes to sell the average house. February 2023, we had 3.1 months of inventory with 51 days on market. The next depreciation over the next 12 months was 3.8%. And right now we sit at 4.4 months of inventory with 46 days on market. GC, am I thinking about this right when I'm thinking, okay, if we are in this low months of inventory kind of like scenario that is right around where this February 2019 was, plus we also have lower days on market than any of these two periods, it'd be pretty fair to assume that we're going to get somewhere between here or more, between 4.3% and 3.8% home price appreciation over the next 12 months, or maybe a little bit higher.
I don't think anybody can get that specific and say, are we going to get between 3.8 or 4.3? I do want to caution us a little bit on saying, well, this is exactly what's going to happen because this data suggests this.
Okay.
But overall, what you're suggesting is 100% accurate, right? Compare what you were thinking about real estate in February of 2019.
Yeah.
Were you saying to yourself that the market can't go up anymore? That this is something where I'm expecting home prices to go down or rents to go down? Or were you saying that houses are staying on the market so long and things aren't selling? No, nobody was saying that in February of 2019. Right? But we lack this perspective, especially when we start to read headlines out there, because right now people are comparing headlines of activity for what happened in February 2024 to February 2023, or worse, February 2022 or 2021, which were just not normal.
Which were insane years.
Which were insane years.
Right.
And when you read those headlines, the conclusions they try to draw is that this is a slow real estate market or that home prices can't possibly go up anymore. And this data with perspective, I think, helps all of us see what it really looked like prior to the pandemic. Remember what we thought of the real estate market at that time. Many of you were acquiring properties in 2019.
Yep.
And if we were doing the show in 2019, which we weren't, we started in January 2020, I bet the questions that I was getting were not going to be, do we think the market's going down? Right? Do we think that it's taking too long to sell a house? But those are some of the questions that we receive on the show. And I understand why, and I love them. But those are the questions that we sort of have to defend why this is a good real estate market in today's day and age. But this data with perspective, I think just helps, right? February 2019, everybody thought was a really healthy real estate market. It had less sales than we had in February of 2024. 1842 to over 2,000 sales just last month. We had roughly the same months of inventory, which is lower than historical standards, which would lead to expecting higher than normal home price appreciation. And we had more days on market. We had 57 days on market. We only have 46 in February of 2024. So yeah, so your general thesis here of, listen, the cards are stacked. The deck is there that if you're looking objectively at where we are for a real estate market, and you think that we're on the precipice of potentially interest rates coming down sometime over the next year, very easy to conclude that you would think home prices are in line to go up. And that's what I think. And that's why I share it with all of you that if you're on the cusp, if this is the time that you're thinking about buying over the next year, this is the right time to do it. It's for all those reasons.
Got it. So we look at the national data, this idea that there's a shortage in supply. We're looking at this idea that mortgage rates are going down, prices are going up, and then we're looking at the local data. We're looking at months of inventory. We're looking at days on market. And it's very reasonable to believe that prices will continue to go up. They will continue to go up at the typical average that they've been going up in Jacksonville, or, you know, like somewhere close to there, which when you do the math, which you just did a second ago, is this idea of like, okay, so if we're thinking about this reasonable number that's going to go up, it's likely that a property over the next year or so goes up $12,000. So the cost of staying in the sideline, if you want to get into real estate and you're waiting for like the right time to get in, as people, you know, like to say, if you're going to wait a year, you're going to be giving up that equity and you don't get that piece back, versus if you get it now with interest rates as they are, a year down the line, interest rates go down, you pay like $3,000, you get the lower interest rate and you lock all that stuff in and you continue on your merry way.
And we've only talked about the benefit of home price appreciation over that time. We haven't talked about principal pay down or tax savings or inflation hedging and inflation profiting. All of those profit centers you get by taking action and buying today. And just don't be scared about the interest rate today. It's going to be cash flow positive today. So you don't have to be concerned about it today. You are only there for upside if and when those rates go down in the future.
Got it. Okay, cool.